All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another Bitcoin video analysis session. I am simulcasting, so hold on. Let me just pull this over here. I am simulcasting on TradingView and on YouTube. So just a couple of quick things before we begin. If you are watching me on TradingView, please make sure to refresh the browser because often you won't be able to see me, and refreshing the browser will solve the problem. Okay. If people come in and they start saying, hey, whatever, just tell them to refresh the browser. Number one. Number two, if you're just joining me, welcome. Let me explain to you how this thing works. So first, I'm going to be going over the economic calendar. As I see Alex knows, right? He knows my routine in advance. Good job. And you should do that every Monday. TradingView has its own economic calendar. It doesn't matter which one you use, but you should be aware of the important planned events each week, especially if you're in Forex pairs. Okay, so that's the first thing we're going to go over. Then we're going to go over the Bitcoin analysis. And today I want to touch on the mindset, the effective mindset that you really should have going into this regulatory environment, because now we're starting to hear from the regulators, are we not? So we'll talk a little bit more about that in a moment. And then, of course, I'm going to respond to your questions about markets. So if you have a question about a stock or an altcoin, please share it in the channel now. And when I get to the Q&A portion, I will look at the chart and provide some perspective. If you're asking about an altcoin, please make sure to put USD or USDT after the symbol so I get the correct symbol, okay? So just a real quick hello to my people. I got Alex, good to see you from Romania. They freed them, Alex. It's about time, right? I mean, I don't know about Romania, but it's good to see they're on house arrest. All right, that's all I'm going to say. Alex knows who I'm talking about. All right, Mr. Plow, Kai, good to see you. James, all right. Eligius, good to see you all. Okay, the 13, cool. All right, good to see you all. Thanks for joining me, you guys. And on Trading, Gustian, okay, cool, good to see you. Again, thanks for joining me. All right, now, man, I see I got some slow numbers here. Maybe it's the time of year. Maybe people go away. I don't know what the story is with that. Anyway, all right, but we're here. Let's take a look at what's going on. Now, first things first, right? Before we get to the chart, let's talk about the economic calendar. Now, as we know, this week has some important things if you've checked, right? So Alex here says NFP on Friday. Yes, that's the most important thing. But we have a couple of things before that. So it's what, tomorrow, which is for the 4th of April, we have some rate announcements, right? We have Australia, we have New Zealand. So those can affect those Forex pairs if you're in them. They're not usually global affecting. This is not global affecting news. Like the dollar usually doesn't respond to those type of rate announcements. But if you're in the particular pair, you should be aware. Okay. So that's tomorrow. On Wednesday, we have, I think services PMI number or something like that. I forget. It's not a big deal. It's not like the CPI number, but there is some kind of PPI or services CPI or something like that, but it's not like the main one. So I wouldn't worry about that one too much. Also, Canada has their unemployment rate and also on Thursday, we have the ADP employment rate. ADP in itself is not really that important, but it can give us a preview of non-farm payrolls, okay? And non-farm payrolls, of course, is on Friday, which is the 7th. So that's the most important event. The reason why you need to be aware of this, for one, is because if you have positions going into non-farm payrolls, you want to make sure that you are mitigating risk. An event like that, which is 8:30, it's the first Friday of every month at 8:30 a.m. Eastern time. An event like that can cause an unexpected range expansion. And if you're on the wrong side of that, it can be very painful. So it's usually a good idea to take profits before such a number, or tighten stops, or do some kind of thing to mitigate risk. Does that make sense? So that's really all we have to say about the economic calendar. There's really not much more than that. And by the way, so before I get into the Bitcoin thing here, I want to touch on something. As many of you know, I've been talking about the trade scanner. The trade scanner is basically another name for my auto setups. Okay, I call it trade scanner because it's much more self-explanatory. Most people don't even know what a setup is. put the word auto in front of it, they think it has something to do with a car. So Trade Scanner, you pretty much know what you're getting, right? Now, these are channels in my server. These are available to some of you, right? Some of you have access to them. There are two channels, they're text channels, and they produce notifications. There's a stock channel, and then there's a channel that looks at altcoins and Bitcoin, okay? The top 10 actually most capitalized coins. Now, what I want to go over here are some of the notifications that have been coming out very quickly. The stock one has been producing ideas. These are trade ideas every day since February, right? Since I got the thing rolling in February. The Bitcoin one, it started about a week ago, and it's produced some interesting notifications, right? Now, these notifications are good for basically 1 to 3 days because what they're focusing on is a brief change of momentum. Now, a lot of the work, the benefit to this is a lot of the work has been done for you, right? It's looking at two major components, right? That's what produces a message or a notification. The first component, of course, is trend. So it's identifying the trend using certain factors. And then it looks at the second component is it's considering levels, and it's looking for a particular type of momentum reversal confirmation. Once all that criteria is met, which is part of what I teach my students in my training program, right? These elements. Once that's met, it produces a notification, right? So yesterday at 7 p.m. Eastern time, it called Ethereum long. So let's take a look at that, okay? And because the third component to this whole thing, the third component is your judgment. And it's very important. Now, something like this, a tool like this, is not going to be very useful for a brand new beginner, because the reason is you're not going to know how to adjust in terms of perspective. This is good for someone who has some experience, at least 6 months to a year, and you know order placement at least. Like you should at least know what a buy stop is or a sell stop. Like if you're puzzled by what that is, this isn't for you. Okay, so you need some more experience first. Now, so let me make my chart bigger here. All right, let me just do that for a second. All right, now this is Ethereum. Now, when the notification comes out in the channel, what I want to do here with you guys real quick is I want to put together a hypothetical trade idea, or what a trade signal should look like. I went over this with my students over the previous Thursday. So now the channel itself, this is what it'll say. It'll say bullish momentum reversal, and then it will list whatever has shown or proven the bullish momentum reversal. So, and it gives a timestamp, right? That's all it gives. It gives a price and a timestamp, and then it says, look for confirmation on 1 hour or above, right? So no less than 1 hour chart. You want to look at 1 hour chart or above. So let's do that here. Let's start with a 1 hour, okay, of Ethereum, and let's take a look at what Ethereum looked like yesterday at 7 p.m. Eastern time. All right, you guys following me on this so far? So let's go back to that time. And by the way, the price on Ethereum, and you guys who have access to this channel, you can confirm this, the price was $17.93. That's the price when the notification came out. So let's find that here on the chart. Okay, so $17.93 is right here. All right, now let's look at the time. So we're looking at 7 p.m. Eastern time. That would be about here, right? And I'm going to highlight that. Based on my chart, that's basically right here, right, on that candle right there. So that's when it called it. Now, this is an hourly chart, all right? So at 7 p.m., this number comes out. Bullish reversal, bullish momentum reversal, right? Ethereum, 1793, and a timestamp. So what do you do with that? Well, the idea now is you have to first look at the bigger picture. So this is what your chart looks like at the time, okay? This is what your chart, actually, this can't be right because 1793 is over here. So actually, my timestamp is wrong. It must have called it around here. Something, what time is that? 11 o'clock, 10 o'clock, 9 o'clock. All right, it's somewhere in this area, okay, that it called it, somewhere around here in that area, because this is the price, 1793. So either it called it, it can't, unless the timestamps are, oh, you know what? This is probably it right here. It's probably at around there because 19 is 7 o'clock my time. So I'm sorry, I messed up. My mistake. All right, so let's get the timestamp right first. All right, so that's where it called it. Okay, right there, because that's the timestamp. All right, I have to remember what time zone I'm in. All right, so you guys following me so far? Now, real quick. So this is where it called it. So what to do? Well, first, this is not exactly where you want to begin putting the orders together, right? The first thing you have to do for applying your judgment is you have to go to a daily chart. It's a wise thing to do. You can use a 4-hour, but it's a good idea to look at daily. Now, what am I looking for? Can anyone tell me what I'm looking for here? Right? Can anyone? I want to see if you guys are following me on this. Can you guys tell me what am I looking for? Why am I pulling up a daily time frame when the instructions are to look at, look for the confirmation on a 1 hour or a 4 hour? Why am I going to a daily time frame? Who can tell me real quick? Order block? No, that's not the answer. Who can tell me? Why should I be interested in this? What am I looking for? Like I said before, my judgment, or the third component, plays the most important role in this whole thing, because it's going to help you filter out some of these notifications that may not be a good choice, right? Because they're not all good. Not all of them are going to make money. All right. So the idea is to try to filter out which ones have a lower probability. Trends, you're close, but that's not it. What I'm looking for here are levels. Okay. Bigger picture levels. Now, let me ask you guys a question. Does this level right here, is that a support or a resistance level? Who can tell me? Is this a support or a resistance level? No, I'm not looking for the low of the day. I'm not looking for that. I'm looking for levels, right? Levels on the daily time frame. Is this a support or a resistance? Nope, no wave count. Nope. It's good guesses, you guys. But okay, so Stian says this is a resistance. No, I'm not looking for the daily candle close either, because the close is actually occurring on the smaller time frame. All that work is done for me by the scanner. My job here now, once the scanner gives me a price, which is $17.93, that's the price, which is this blue line. That's what it gave me. Okay, so I pull up the daily chart, and my only question is, where is this signal being called? At a support or resistance? I know the trend is bullish, right? So there's no question there. This is a resistance, right? You guys got that right. This is a resistance level. So my next question is, if this thing is calling a trade idea that's around a resistance level, should I have high expectations of this over the next few days? Like, should this be like a swing trade that I plan to hold on to for like 5 days? What do you guys think? This is not a support. Okay, this is not a support. This is a resistance. This is clearly, this area is a resistance. Support would be here, and support would be lower. Okay, these would be supports, not where we are right now. So my question is, this thing is calling along at a resistance level. How should I adjust my expectations in terms of where I think how far this thing should go, or how long I should hold on to it for? Do you think I should have greater expectations or lower expectations? What do you guys think? It's calling along at a resistance level. What do you think? Okay, so I'm just looking at the answers here. So Peter says no. So I probably shouldn't have great expectations. I should probably think, well, so the swing trade idea along probably has small potential. Where would it have greater potential? Where should this signal, where would be the ideal place for this type of signal to appear? Who can tell me? My students should know. Peter says the low. Okay. Stian says small expectations, tight stop loss. Okay, good answer. So where would be an ideal? So Peter says low. So the support level, right? So the scanner, the reason why I can't program the scanner and say, well, look at these bigger picture resistance levels, because if I do that, it'll filter out everything. There has to be some flexibility, right? And that flexibility has to come from your judgment. So if it's calling along at a resistance level, you should be more conservative. Should you avoid the trade altogether? Perhaps, if you're like, well, I'm only going to take conservative trades. Okay, no problem. By the way, I highly recommend you paper trade this. You don't put real money in until you have a good feel for what for the notifications that it's producing. By the way, you should also have it set to push notifications on your mobile device so that you get these things right away, right? Otherwise, you have to go into the channel and check every time. So now the thing is, it's not bad that it's at resistance. It's just you have to use your judgment and say, well, there's a lower probability that it follows through. It's a resistance level. Resistance levels typically are where there's selling activity. So it doesn't mean that this is a bad idea. It just means you have to treat the idea in a more conservative way, right? That's the best practice. So this is the daily chart that I'm getting this from, okay? So it's a good idea to get this judgment from the larger time frame, the daily chart. Now let's go to the 4-hour chart, because this is an appropriate time frame. This is very appropriate to use for this, especially for the coins, okay? So I'm just going to touch on this and then we'll move on to the Bitcoin analysis. But I think this is very important. So based on the 4-hour time frame, okay, based on the 4-hour time frame, it called basically, look where this blue line is, right? The blue line, you see that? That's where it made the call. So it made the call long. Look where this thing is high, 1839. So this thing is about what, 50 points now in the green? So not bad. The question is, what's the risk? What was the risk? Of course, we see this after the fact. Again, this was called at 7 p.m. Eastern time, right? And we see the result now. Okay, it looks good. It's green. What's the risk? Who can tell me what the risk was on this trade? Can anyone tell me what the risk was? So as you guys are coming up with the answer, the first step, of course, is we're looking at levels on the bigger picture to determine, to help shape our expectations, right? That's really the most important part of using our judgment. The second part is this, is what's the risk? What's the risk of this trade before it made the move? Because before it made the move, it looked like this, okay? This is what the chart looked like at the time. This is what you were looking at when you pull up the chart after it gives you the notification. So where's the risk? What is the risk on this? Because most likely it's going to produce it on the green candle. Let's see, this, yeah, it basically looked like this at the time, right? About the green candle, right? Like that, looked something like that. Okay, so who can tell me? Let's see, you guys can tell me here, Stian, the low of the candle. Okay, so Stian, of course, is a longtime student. Stian, you're getting all the answers. But that's okay. Someone has to give the answers. So yeah, now the low of the candle is one place to consider your risk, to measure your risk from. It's the first place, but you should also look at the swing low. The swing low would be over here. The lower low, 1762, would be a good place to measure risk from, because look, it's a swing low. Okay, hold on, this thing's giving me a hard time. Stupid mouse. Okay, so this, you guys get that about the swing low? That's a swing low. This is also a swing low. It's the lowest point in a recent data set, right? It's the lowest point. So you can use that as a place to define your risk. It's usually a better idea to use the swing low rather than the candle low, because there's a greater probability that the candle low will get tapped. Okay, so like for example, if you used this green inside, let me erase this box. See this green inside bar? If you got long at the top of that and put the stop at the bottom of that, you were stopped out. So that's not exactly the best place to put your stop. If you use the swing low, which is 1762, what's this low over here? 1763.50, right? Almost tapped out 1762. That's why it's usually a good idea to maybe put your stop slightly lower than the swing low, right? So that you don't get caught in that noise. Does that make sense? So if that was the case and you took this trade, what is the risk? Well, that's about what, 30 points? 30 points of risk? Something like that, right? That means this thing here is almost at 2-to-1 reward risk. At the high, 1839, okay, that's about 50 points, something like that. And 30 points, about 30 points is your risk. So you're over 1-to-1. You're at about 1.5-to-1 right now. Okay, does that make sense? So this would be a good time to take money off the table, but you should have all of this figured out in advance. All these orders that I'm describing should be figured out when the chart looks like this. So let's put the orders together. Let me just give you an example, then we're going to jump over to Bitcoin. So the entry would be basically 1793, I'm sorry, right about here, 1793. That was the actual price, okay? The stop would be 1763, but let's just say 1760 because you want to give it a little room based on this low over here, okay? And With that information that you know before it makes its move, you multiply that amount. It's about 30 points. You multiply that by 1.5. Okay, so that gives you 45 points, right? 1.5 times 30, that's 1.5 to 1 reward risk. You're looking to profit 1.5 times what you risk. So when we add that to the entry price, which is a buy stop, by the way, because all this should be placed in advance, or it depends on where the candle closes, right? Like at 17, you may not get that 17.93 price. It may be a little higher, for example. Okay, you may have to put the buy stop a little higher, or if it's at that price when you pull up the chart, then you can place the market order at 17.93. Does that make sense? So now we're going to add the take profit, right? 45 points. So how much? What's that? What does that bring it to? So what is that? 93. That puts it at, let's see, like 33, 1833. Okay, which gives you 1.5 to 1. And where are we right now? 1825. This thing was as high as 1839. So 1833, around there. So let's just say 1835, just to give you a nice even number. That would have been here. It would have went 1.5 to 1 times its risk. Okay, based on this information. Does all of that make sense? Does all of that make sense? Basically, that should be, that should be 1.5 times the entry, which was this. This is the profit area. Okay, that's ideal. Now, if you're going to be more conservative and you want to take the money off at 1 to 1, you can do that as well. But it's usually a good idea to aim for 1.5 to 1, and you only have a 1 to 3 window, 1 to 3 day window of expectation for these. It could be longer, but best practice 1 to 3 days. You guys follow me on all that, right? And this occurred all in less than a day, because this was at 7 p.m. Eastern time yesterday. It's not even been 1 day, okay? And it delivered 1.5 to 1. That's what I'm talking about. This is what the trade scanner does, okay? So if you're interested in this sort of thing, I'm going to give more instruction on how to set up these orders. I just wanted to run through that really quickly so you guys can have an idea. And each week I want to touch on this. There's plenty of examples, but I could be here all day on examples. Not all of them work out, but many of them do. And I've been getting some great feedback, especially for our stocks. All right, so now let's get into the Bitcoin situation. By the way, if you have questions about the scanner, let me know. You can send me a message on the server, a private message. But let me just say this: if money's tight and you can't afford like $50 a month, if that's tight for you, then I understand. But don't text me then, because this isn't for you. All right. And if you have no experience, this is also not for you. So just a couple of things to mention there. Otherwise, you can find more information by click on the link in the description or in my signature. There's more information there as well. All right. So let's talk about Bitcoin, shall we? By the way, this thing called Bitcoin too, at 27,192. It called it at 4 a.m. I'm not going to go over all that, but look at the price now, 28,131. It called it long at 792, right? So that's 27, whatever it was, 920 something, right? I forget the exact price. So this is up like 100 points, a little over 100 points, 150 points. Okay. Can you show? No, I can't. I'm not going to show it. It's a channel, and the channel produces these price notifications, a price and a timestamp. And I just showed you what you have to do with that raw information. It's raw trade information, and you have to know what to do with it. Okay. So like I said, I'm going to produce more instruction on that and all that kind of stuff. But that's why I wanted to go over that real quick, because it's been getting some very interesting results. Also, again, do this on paper. Okay. If you want access to the channel, and most of you have access, but not all of you. If you want access, send me a message, or if you want more information about that, just click on the links. Okay. And you can learn more about that, how to access that stuff. Okay. Anyway, let's move along here. Okay. All right. So let's talk about Bitcoin, shall we? I know I talked a little bit longer than I wanted to about that, but it's important because people should know how to use this raw trade information. It's based on my personal screening criteria, which I'm not going to share. But my students have the foundation for that, because it's covering certain things that we go over in the six steps for objective price action analysis. Like I said, it's taking most of the work. It's doing most of the analytical work for you, but you still have to use judgment, like I said, looking at the levels on the bigger picture, and then shaping your expectations, and then adjusting your orders around that, okay? You have to come up with the buy stop, the stop loss, and the take profit. You have to come up with that. But if you stick to a simple formula of 1.5 to 1, that's appropriate. And you keep your expectations at basically 1 to 3 days, that's appropriate. They're not all going to work. Some of them are going to stop out, and I have plenty of examples of those. But if you use some judgment, you know, some of these obvious ones you can avoid. All right, anyway, so let's move along. Let me know if you guys have any questions. Yeah, yeah, Alex. I was very happy about that. Okay, I was really happy about that. It's about time. Okay, anyway, so let's talk about Bitcoin now, and let's talk about the regulatory environment. Okay, because that's very important. A good source, by the way, for regulatory news, Coin Bureau, you know, YouTube channel. Like the guy's name is Guy. I love the British humor. Okay, he's got his very subtle British humor. It's entertaining, but more importantly, he gets into some important like legal stuff and regulatory stuff, and that's important, right? So that's a good place to catch up on that. Now, here's what I want to say about that. First of all, let's talk about the mindset for the regulatory environment, because we're going into it now. And a lot of people have been ignoring it. Back in January, everyone somehow forgot about it. Oh, Bitcoin's going to 40K, right? We're not at 40K yet. Half of these people were saying it was going to be at 40K by now. We're still not there, okay? Now, so here's my point about navigating the regulatory environment. Number one, you should be aware of what's on the regulatory horizon. Hey, Raman, you should be aware, but do not let it plant the seeds of opinion in your mind. Let me give you an example. So, you know, the SEC now is going after Coinbase. You know, the CFTC is going after Binance US, right? So on the surface, that's bad, right? So you're going to think, oh, you know, so you're going to connect it to logic, and you're going to say, well, that can't be good. And worse, you may say, well, the markets are short because, you know, they're going to sell off on this bad news. You're applying logic. The market doesn't care about your logic or what is obvious. Markets are driven by irrational behavior. So my point is this. If you want to be aware of the news, okay. But these trade decisions that I make are purely technical. I don't care about what's going on really in the news. A lot of times, when I call trades, the news happens to come out and move it along. Like when I called this short back here, back in February or whatever it was around here somewhere. I mean, that short worked out really well, and it went to its price target. That was one that I called, not my system. It was counter trend. My system does not call counter trend trades. I called that trade, okay? And that was when the banking situation started, right? The banking drama. And then as a result of the banking drama, you know, we had this squeeze, okay? When we had the run to safety. You see that, right? If you were opinionated throughout this process and so, oh, well, Bitcoin, you know, Bitcoin should go here because of this, and you stayed short, that would have been a painful loss, okay? If you just focus on technicals, and this is where charts do shine, it will keep you out of trouble. Forget what's going on around you. Stop consuming the garbage that everyone else consumes. The first step to doing this effectively or navigating the markets effectively is you must not be part of the herd mentality. You have to separate yourself. One way to do that is to stop consuming the same information that everyone else is consuming. Now, I just finished telling you about, you know, Coin Bureau or whatever, right? Okay, it's good if you want to just get some general idea, but do not use that information to make trade decisions. You must separate it. Do not use that because there's no way to know all the factors that are being priced into the market at this moment. So by accepting that, and by accepting that markets are highly random and driven by irrational behavior, you can have more faith in the price itself. And that means price structure and levels, which are the first two steps that I teach my students. Price structure and levels. You can actually get away with price structure, levels, and confirmations. And really, that's all you need to make rational and reasonable decisions based on the actual structure of the market rather than your own opinion. So my point here again, with all this regulatory stuff coming out, and by the way, speaking of regulatory, you know what I forgot to do? I'm going to do this now in the middle of the stream. Let me just do this real quick. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. I was supposed to do that in the beginning and I completely forgot. Anyway, so speaking of regulatory, don't let that move your mind. Do not react to it. If you're someone that suffers from FOMO, right? Fear of missing out. If you suffer from that, you haven't gotten over yourself yet. And you have, before you even put on your first trade, you have failed. Okay? You have failed. You must separate yourself and you must learn how to anticipate the market, not react like everyone else. And part of that comes from opinions. Opinions come from news. News plants the seeds of opinion. Oh, I think this. Well, I think that. Well, I think this. It doesn't matter what anyone thinks. What matters is what the market thinks. So you have to have a passive mind. You have to have an open mind. No opinions. People ask me all the time, well, what do you think of Bitcoin? Well, what do you think? I have no opinion. I have an open mind. Okay. I'm looking at levels. I'm looking at structure. So with that being said, right, that's the best practice for navigating this oncoming regulatory environment. It doesn't matter how informed we are, unless you know the guy that runs the SEC personally, unless you know who runs the president of the CFTC or whatever, unless you know Chairman Powell personally, and they tell you what they're going to do before everyone else, then you're basically in the same boat as everyone else. You have no special information. So we have to use the charts to gain a sense of what's really going on behind the scenes, because the charts are a reflection of order flow. Okay, and order flow are really nothing more than a reflection of people's emotions or decisions, right? And they're betting money on their thoughts and actions, whatever. They're betting money on their feelings. So they're voting with their money. And that is what creates, we get a history on the chart, and that is how we're looking at these things. So the levels carry some sort of emotional meaning. A resistance level is typically a place where people get out, right? So probability is greater that there is going to be selling activity there, right? That's why it was so important earlier when I talked about the resistance level with Ethereum. Now, let's talk about Bitcoin. By the way, all that Ethereum analysis, all of that could have been achieved by looking at a Bitcoin chart, because it's the same chart pretty much, right? Just the numbers are not the same. So let's talk about that real quick. All right, so are you guys clear? If you have any questions about the mindset for the regulatory environment, let me know, and I'll talk about it further. But the key here is to rely on the chart information, okay? Certain factors of the chart can help us gain some sort of clarity. Now, charts aren't perfect. Charts cannot see the future. Just like my scanner cannot account for quarterly reports, for example, or it cannot account for what's going to happen with NFP. The scanner can't possibly account for that. It's only looking at temporary momentum changes, right? So you have to account for it. You have to use your mind. You have to use your head and consider this from the perspective of risk. So with that said, let's get into Bitcoin here and let's talk about what's going on. If you read my TradingView article yesterday, I talked about relative strength, not to be confused with the RSI. Relative strength is basically when you compare a market to another market, okay? Usually a parent market. This is typically done with stocks, right? You have the S&P and then you have your stock, and your stock is going to have some correlation to the S&P. If the S&P is strong and your stock is not so strong, that means your stock is generally weak. And if the S&P sells off, your stock is more likely to sell off. So you don't want to be long, okay? Or maybe it's an aggressive short or something like that, okay? So when it comes to Bitcoin, like I said, well, so Bitcoin is the parent index. So then who do I use as the parent index? Well, you can use the S&P, you can use the dollar, you can use the NASDAQ, because that's really what we're dealing with here, right? So let's take a look at the NASDAQ real quick. Now, this NASDAQ has been unbelievable, right? In recent, look at this price action. So this is the NASDAQ over the recent few weeks. It had this breakout and it's been ridiculously strong. But like I wrote about in my article, I'm not impressed, because look where we are, right? We took out some resistance, or these lines are here, but we have not taken out this one. And this one, which is, what price is that? 13,532. That can hold. And if that holds, this is all just a big waste of time, right? So my point is, don't get caught up in the hype and all the, oh, this is the time to invest in stocks. Highs are usually a really bad time. So anyway, why do I bring this up with Bitcoin relative strength? Because if this is how the NASDAQ has reacted, okay, and Bitcoin, let's go back to the Bitcoin chart, okay, and Bitcoin, let's go back to Bitcoin, and Bitcoin, this is all Bitcoin can do. This is it. We get that. That's all. That's muted. That's hardly a rally. Okay, we have a little bit of a pin bar today. Okay, at a resistance level, it can't even get out of its own way. So what happens if the NASDAQ really pulls back? I mean, with a rally like that on the NASDAQ, I was expecting to see Bitcoin at 30K, right? Or maybe above 30K. Where is it? So there's relative weakness here, which means if the NASDAQ really pulls back, I'm not talking about one red day. I'm talking about if the NASDAQ pulls back a few percent, maybe 5% over a week or two period. Bitcoin is in a very vulnerable location. And we're likely to see that pull back to 25K in that scenario. That's what I'm looking for, okay, as far as bigger picture. That's the swing trade mentality, which is not to be confused with the smaller time frame mentalities, right? A swing trade is usually longer than a day. So if this is what it looks like on horizon and we're at a vulnerable location, why would I want to go long for a swing trade here? It's a bad idea, probability wise. Now, for the scanner, yeah, you want to make a couple of 100 points or something, small time frame, all right, no problem. But your risk is also limited to that smaller time frame. You're not going to put your stop at 25,000. Okay, so if this thing pulls back to 25,000, which is basically the move that I'm looking for, that's where the swing trade long probability exists. Okay, that's what I'm looking for. This is what I want to see. I want to see a retrace to this area right here, and that can occur over a multi-week period, and it can start from this location. Now, I had a little map drawn, like a little roadmap. I erased the pullback part because the market rejected my idea. Okay. In fact, let me see. Let me go back to the 8 cap chart here. Where's my 8 cap chart? Hold on, because I believe it's on my 8 cap chart here, right? Oh, here it is. So hold on a second. This mouse is giving me a hard time today. Hold on. All right, so the 8 cap chart, right? So you see this map that I drew? I originally had the pullback, right, mapped out, but it rejected my pullback. It rejected it, and it basically rallied again. So now it's like, all right, I'll leave it open, right? We'll have an open mind about it, and we'll see. Do we get the pullback now? But as you can see, this box right here, this rectangle, that's the high probability location. Will the market give that to me? Will the market deliver that? I don't know. Okay, it's not about forecasting it like and telling the future like everyone wants to hear. It's about if the market delivers. If the market goes to 30K first, then I have to adjust. Okay, then 25K becomes a much lower probability. Does that make sense? Okay, so if we get there, we pull back to 25K, then I'll be looking for the swing trade. Now the scanner, of course, will also most likely be calling longs in that location. If the scanner is calling longs in that location, that is the location where everything is aligned. And I'd be very happy to see that. And I can be more aggressive with my targets, with my take profit orders, right? Does that make sense? Okay, so that's what I'm looking for. And that's what I have drawn out here. That's what these lines represent, right? This would be the more aggressive, more high probability move if we could get that pullback to that level. If we don't get that pullback, then I have to adjust to whatever scenario the market gives me. Now, maybe some regulation will come out that will knock the wind out of the market. Who knows, right? We don't know how the market is going to react to certain information. We have to keep an open mind. Does that make sense to everyone? Let me know if you guys I don't see anything going on here on TradingView. I'm sorry, on YouTube. Let me know if that makes sense to you guys. Okay. All right, cool. So now let's start getting into the Q&A portion, because that's pretty much my Bitcoin analysis, right? So I went over what the mindset for navigating the regulatory environment, and then I went over this scenario, this retrace scenario, where the high probability location is, which is 25K. I'm expecting my scanner to also call trades in that area, even though it's calling trades now. These, as we talked about before, are low probability in terms of swing trades and better for smaller time frame strategies like day trades, or you get in for the day, right? If you're risking 100 points, you look to make 150 points and you're out, and that's that. It doesn't matter if it runs to 30K from here. The probability is not attractive. Does that make sense? Okay. So hopefully this thing is still working, because again, you guys have any questions about that, let me know. So let's start going over the questions that people have about markets. All right. So I'm going to run through YouTube first. Alex asks, can you take a look at BBBY, right? Minus 95% off the top. Now, here's the thing with stocks like that, right? Playing that game with the really, really beat up stock, it's usually a bad idea. Okay. I mean, the stock is beat up for a reason. You say, well, it's so low. I mean, it's got to bounce. No, it doesn't have to bounce. This company has some serious problems. So, when you're dealing with something like that, I mean, look at this thing. You're asking for trouble, right? If you're trying to play one of these quick moves, just realize it's a gamble, right? You're better off working with a stock that's in a bullish trend. Like at one time, this was in a bullish trend, as you can see, right? Going back over here, you want to look for those type of pullbacks, not new lows, and then you're trying to play the next bounce. It's a low probability gamble, right? You might as well play a slot machine. So it might work, but I'm not a fan of this at all. I would just personally, I would leave this alone. All right. But if you're thinking you want to gamble, it's certainly at a low, but who knows, if you get a pop, you want to be out of that thing pretty quickly. Okay. This is not a healthy stock at all, and not something to have high expectations of. All right. So that's BBBY. Good question on that one. What do you think about okay, VIX? I know less is more. Okay. So VIX is I guess provides more value when it comes to using options, right? But this, first of all, the whole world is onto this, so it doesn't really provide any advantage, and it's also, the problems with the VIX is it's relative. The levels are relative. They change. So one time a VIX, what's the VIX at now? 18. At one time, like 14 was like, oh, if it's at 14, that's the top of the market, right? But then another time, it was like 10 was the top of the market. So, based on what we can see here, you can say that when the VIX, it's basically used as a fear index, right? And it's measuring the amount of puts being bought. So if the index is going lower, that means there are less and less puts, right? People aren't worried. That usually happens when markets are pushing highs of some kind. So what's the relative low here? 14, right? 14 area. So if it pushes into the 14 area, the market is likely overbought. I guess you can use it that way. And if you're talking about market bottoms, you're looking at these ranges up here, which is what, 34. But the thing is, and what's the most recent one? 30. The thing is, you can't look at that and say, well, that's the market bottom. It's just like you can think of this as like an oscillator. You can think of this as like a stochastic or something, right? The market bottom may not, just because it goes to 34, doesn't mean the market bottom is there, right? If you want to find the market bottom, part of that has to do with the bond market and all that stuff. That's really where you should be looking. All right. So hopefully that answers your question about VIX. Speaking of the bond market real quick, look at the bond market. This is the bond market on a weekly chart, okay? The 10-year note. I look at this all the time. This trend is not exactly bullish. It's trying to change, as we can see, right? It's making an attempt here, but this is not enough information to really convince me about a stock market rally that's sustainable, because this could be a failed high, okay? This can easily be a consolidation high within a broader bearish trend. Now, we know the Federal Reserve, of course, is interested in continuing to raise rates. That's going to put pressure on this thing, right? So my big question is, do we make the lower low, or do we break out and do we start to construct a bullish trend? We have the beginnings of a potential bullish trend, but I'm not convinced as far as these levels, okay? We need to really clear like a level, like this level here, right? 122. I need to see something like that. And that can take months. So please realize that, okay? That's really, if anything is going to signal the stock market bottom, this is where you're going to see it. You're not going to see it on something like the VIX, okay? The VIX is just relative. All right, anyway, so good question there. Let's move over to TradingView. Let me see what you guys have to say over here, okay? All right, so let's see. All right, you guys were answering my questions there. You got the low of the candle. All right, let me just see. Do I have any questions about stocks or anything? Okay, so Steen is asking about oil. Oil is interesting. So let's take a look at oil. And oil, there was news on oil. I believe OPEC, they cut production the other day. I think it was Friday. And this is what oil went berserk on that, right? So let's take a look at this. This is WTI USD, which is the oil CFD. In fact, I should switch this to USD WTI so that the price makes more sense. Okay, there we go. So look at that gap today. You see that gap? That's because of the OPEC cut, right? I mean, imagine you were short oil and that news came out. No chart can tell you that that's coming, okay? So oil happens to be at a resistance now. So here's the thing, Steen. If you were thinking short oil, right? I mean, now would be the time to be thinking it, if anything. Or if you're long oil, now would be a good time to unload. But don't get caught up in the news, right? Because of that OPEC cut. I mean, now oil is going to, new bull market in oil. It's going to go to 120, blah, blah, blah. Don't get caught up in that nonsense, right? We are at an important resistance level here on the bigger picture. So if there's any place to sell oil, this is the place. This is not a place to buy oil. All right. So that's how I'm going to treat that. As far as that goes, if I see a sell signal develop, which there's nothing there yet, it would be an aggressive short. Okay. Otherwise, this gap can be filled, and you have a support level on oil. Let's pull up the support level here. Hold on a second. You have a support level right here. Right. What is that? 73.59. So those are your levels on oil, and the trend is still generally bearish, right? So when it comes to oil, not only do you have to consider the OPEC situation, right? I mean, in general, but look at the dollar, right? Look at the dollar index. Now, oil is very sensitive to a lot of things, but let's take a look at the dollar index. So dollar index isn't exactly rallying. You see that? And you can see that dollar is going lower. Bond prices are rising, right? Which is correct. If bond prices sell off, this should turn around. Now, the thing is, the dollar is in a position to make a higher low. It hasn't done so yet, but if it does, and it starts taking out resistance levels, then I would expect oil to be under some pressure, right? Because of the stronger dollar. But we don't have that at the moment. And this weak dollar situation may also contribute to that oil strength. But it all goes back to, right, again, opinions aside, it all goes back to levels and structure. General structure on oil is bearish. Level, though, in level, you're at resistance, okay? In short term, you could say it's more of like a consolidation or midterm consolidation of prices. And in very short term, you could say it's a bullish move, right? So does the bullish move continue? We don't know. All we know is we're at a resistance level, and it's a good place to take a chance on the short side if it confirms, which it has not done, okay? And you have the dollar working against it, okay? So keep that in mind. You're fighting the dollar right now. If the dollar turns around, that may make a better story or better potential for the oil short. Does that make sense? Okay, cool. So let me move on here. All right, good question, Steen. I someone asked me about gold. Matic, Tony wants to see Matic. All right, sure, we'll go over Polygon. Polygon is one of the coins that my scanner calls. I've seen it on the list a number of times. Okay, let me see here. It's one of the top 10. I saw someone ask for gold. Was it Kai? I think Kai was asking me for gold. Hold on. Yeah, gold. Okay, so let me run through gold. If I miss your request, I apologize. Let's jump over to gold. Let me just put that over here. XAU USD. What's going on here with gold? Now again, gold, and we might as well, if we're going to look at gold, we looked at the dollar. Let's just pull silver up real quick too. Okay, there's silver. Okay, 23.98. Interesting. But these are dollar reactions, right? This is going to react to the weak dollar. As we can see, the dollar is not exactly resuming a bullish trend, right? So gold is getting some strength from that at the moment. But as I was pointing out to, I think Sean, because Sean had a gold position recently, look where we are in the bigger picture on gold. This is what you need to pay attention to, right? All the opinions and all the expert gurus and nonsense aside, just look at where we are. Just like that Ethereum example that I asked you guys about before. You guys tell me, this is a weekly chart on gold. Is this a support level or is this a resistance level? You guys tell me. What price is this? Basically 1980, high 19. This is almost 2000. Let's just round the number to 2000. Is this a support or a resistance level on gold? All right, let me see what kind of answers I get on that. Hopefully you guys get this right, because this should be easy. Is this a support or a resistance? Resistance, correct. That's Captain Obvious right there. Like, you can't get any more clear than that. That's resistance. So if that's the case, even though gold may be acting bullish right now because of that weaker dollar, this is generally a bad place to be buying gold. Okay, I don't care what, oh, but this guy has been in the gold market for 50 years and I don't care what they say. No one's doing us any favors. Okay, none of them are doing us any favors. They're all going to say whatever they want to benefit themselves. This is a bad location to be buying gold. As it's shown, going all the way back to 2020, this is a bad location to buy gold. Now, if you're long gold from a good price, great location to unload on all the ignorant fools that are buying gold at these prices. Okay, so great place to unload, mitigate risk, get out of positions. Bad place to buy. Gold is something, I mean, I know some people, you can day trade gold and you can swing trade gold. In this situation, I would stick to smaller time frames because this is high risk as far as swing trades go. We can argue that there's a swing trade long in there, right? We can argue. Let's look at the price action. Let's get really close to it here, and let's just take a look and see, is there a buy signal in gold? Let's take a look. I mean, there probably is. You have inside bars, right? The inside bars are being taken out. Look at this candle today. That's a nice outside bar sort of candle. You can argue that these are buy signals, and you can also argue, oh, old resistance, there's some minor support there. Okay, great if you're in a day trade. Great if you're going to hold on to this for a day or two, but not good if you plan on holding on to this for like a couple of months. Okay, bad location. Does that make sense? Gold may pop over 2,000 and suck in a lot of people who don't know any better. Oh, gold's going to 5,000 now, blah, 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 blah. Right. But the risk you take is enormous. Does that make sense? So bad place for gold. I have no interest in buying gold here. If anything, if a nice solid short signal shows up and I see some confirmation in the dollar, I'd be more inclined to sell gold, to short gold. I mean, as you can see, there've been a couple of sell signals recently, but they're not following through. Okay. And again, that has to do with the weak dollar. And we have this, I mean, this recent squeeze in gold, of course, as we know, has to do with the run for safety with this banking situation, which I think was overhyped and over dramatized anyway. And gold is a very emotional metal. It's known for that. Okay. That's nothing new. Does that make sense? So that's gold. All right. So good question. Let me see what else you guys got here. All right. Looking at USD RON weekly. All right. Oh, the Romanian currency. Is there a reason I shouldn't keep all my money in? Okay, we'll take a look at that. Let me just see what other questions I got. If it will break out and flip the resistance to support. All right, but if it flips the resistance, Alex, gold, which gold can do, we still have that general location is a tough spot for gold. We're looking at a multi-year resistance. This is not just some minor level that we're playing around with here. This is a very heavy-duty resistance, which means there's probably heavy selling activity in this area that we cannot see. You say, well, how is it heavy selling? The market's going higher. We can't see all the orders that are sitting on the order book. We can't see them. And we also can't see the future market orders that will pile into this thing for certain reasons, right? We can't see the potential orders. So that's what you have to keep in mind for something like gold. Yes, and that you know what, the 13, I believe that, because I mean this whole gold move and Bitcoin and all these anti-inflationary products or assets, they're all anti-dollar, right? They're all against this dollar move. Dollar gets weaker, these things are going to go higher. So if dollar pushes lows, I would not be surprised to see this thing above 2,000. But again, I'm still going to respect that level, and I'm not going to get caught up with the macro opinion. Sure, the dollar is weak, okay, but who knows what the Fed will pull up from who knows what the Fed's going to do, right? Who knows what's going to occur? If that dollar finds strength, we are in a location for gold to sell off. Okay, so hopefully that makes sense. All right, let me jump over to let me see what else I got here. Great questions, everyone. Great questions. I hope you're all getting something out of this. So Matic, let's take a look here from Tony. You want to see Polygon? All right, let's take a look, as Jerry Seinfeld would say. Matic. So again, I've been watching Matic. In fact, Matic was a call. The scanner called Matic a few days ago. Okay, I believe that it was called a short. Matic was actually called a short at 112. Let's see where we can put that on the chart here. 112. It's around here somewhere. And I talked about this actually with my students. We talked about this example. I believe it was around here, right around here. It called it short right around there. Okay, this was called a short. Now, so here's the thing with this. The general trend is somewhat bearish, right? And that's why the system called it a short. The system is a trend following system, by the way. It does not call counter trend trades, as I explained earlier. So as far as Matic goes, we have a lower high right here, which is what? 125. So as long as this thing stays below 125, it's likely to act in a more of a bearish way. But right now, it's consolidating. All right. Now the other red flag as far as the short goes, because again, we talk about you have to have some sort of perspective, right? The other red flag about something like this is you can't look at altcoins in isolation. You have to consider Bitcoin. Bitcoin is not a short. All right. There's nothing about it that's bearish. It's not a short. Okay. So if Bitcoin is not a short, and Bitcoin continues to hold supports and maintain supports, how is Matic going to sell off, right? If Matic is generally a follower. So keep that in mind. Even though Matic has been called a short, you have to use your head and be like, well, Bitcoin should be a short too then. And Bitcoin is the leader, not Matic. So you have to, that means the signal that the system called carries less weight. See, so that may be one you'd be like, you know what, I'm not going to take Matic short because Bitcoin should be a short and Bitcoin is not. Does that make sense? That's called relative strength or relative weakness. So that's another component that you can use to help make some judgments, especially when it comes to the altcoins. Okay, but looking at this chart again, we got that level right at 125, and I would say that that's a pretty significant level. And if it's staying below that, and if Bitcoin eventually turns out to be a short over time, this thing is vulnerable to Bitcoin weakness, right? So I called the short in Bitcoin at 26.5 a few weeks ago, right? That was a new short, which is not working very well. It was very aggressive. I warned people about that. It was counter trend. Now, if that happens to pull back to 25K, then this thing may feel the pain, and it's vulnerable to selling activity. So as far as like if you're thinking long, I mean, I would wait for this situation to improve. Okay, if it's going to be a long, it should start taking out resistance levels, not respect them. So 125 is that resistance level. So be patient and wait. You say, oh, but I miss out on all. Don't worry about missing out. There'll be plenty of opportunities to get into these things if the trend is truly changing. And keep in mind with these altcoins, in order to find a sustainable rally, because everyone always, oh, the new rally, oh, the new bull market. In order for that to occur, we need a weak dollar, which we're starting to see, but we also need a bond market to cooperate, right? We need bond prices to go higher, which it's trying to do, but it's not proven yet. When we get a clear bullish structure in the bond prices, then I will believe that we are now in a situation where a sustainable bull market is likely, right? And maybe the stock market, like, the NASDAQ and the S&P, maybe they're setting up for that. And maybe the next pullback doesn't really pull back that far. And maybe that's going to be a big buying opportunity, but the bonds are going to have to confirm that. If they can't confirm it, I do not trust these markets. Okay. I do not trust them, because if money is going to continue to get more expensive, meaning rising rates, then these rallies are not sustainable. right? So that really can help you make these judgments and help you shape your expectations in a market-centric way instead of your own opinion, which is, market. Our opinions are completely irrelevant to the market. All right, and markets are also highly random. That's the first lesson you should learn about this game. It's the first lesson. It would have been nice if someone taught me that when I first started out. If you can embrace that, the sooner you can, the better off you'll be. All right, you guys. So let me see. Would you be able to look at Cardano? All right, look, Cardano is kind of in a similar situation. Let me see. Okay. Can you Litecoin? All right, Levant. All right. Hey, Levant, good to see you. Okay, so let me do this. All right, we'll take a look at Litecoin real quick. Now, again, these altcoins, right? They're all in the same boat pretty much. Now, look at Litecoin. Interestingly enough, Litecoin has a nice recent bullish structure, okay? And of course, the short-term trend on Litecoin is long. It's bullish. So, I mean, I'd be expecting long, the scanner, I would be expecting long signals from this thing. But again, the levels, right? The locations. Is this a support level on Litecoin? I hope you say no. Okay, this is not a support level on Litecoin. In fact, you have a potential double top here forming, right? These two tops right here, and you have a potential sell signal developing if this candle closes like this and takes out the low. That looks like a pin bar to sell. All right, now I'm not one to short these, as you know. I don't short Bitcoin. And keep in mind, it would be counter trend until Bitcoin changes its trend, which it has not done yet. This could be the beginning of that, but we can't make those judgments in advance. If you're willing to take an aggressive trade short, then you should just be looking at the potential, being conservative about it, and measuring your risk. Well, how much risk do I have to take for a bet like that, and see if the market pays off or not? If the market gives you a hard time, you probably should not be staying short. But if anything, this is a bad place for longs. Okay, I wouldn't be even entertaining the idea for a long, unless it was like a day trade or something, because it doesn't really, it's not the same mindset with a day trade. Okay, but your general levels on something like Litecoin, 8809, right? That's a minor support right there. Then you have what, 80 even, which is a more significant support. And then you're looking at this area up in here, you can round that to 100 resistance, right? And this thing is fooling around 92. So that should give you some idea. All right, you guys. So look, I appreciate you guys with all your questions. If you have any other questions, right, you guys know where to find me. You can come to the community. I have a free Discord community. The links are in the description. Also, do me a favor. If you like the content, please press the like button. Please subscribe to my TradingView thing, my account there, or to the YouTube channel. It helps me out a lot. And all that other stuff, you can press the like button or the boost button and whatever if you like the content. I really appreciate that. Thank you in advance. All right, you guys, if I missed your question, I apologize. I got to keep this at a certain time. So come back next week. I'm here every Monday doing these streams, okay? And again, we're going to go over more scanner calls so you guys can have an idea of what's going on there, and we'll see what kind of trades we can put together. Otherwise, if you have any questions, you guys know where to find me, all right? So enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.